ओके, शुरू करते हैं।
एंड सबसे पहले जी हम लोग क्या करते हैं, रिक्वायरमेंट देखते हैं। हमारी रिक्वायरमेंट कहाँ है? um, ये रही, राइट, विच सेइंग, right, let's start. Using the information in all exhibits, evaluate the audit risk to be considered in planning the group audit. Evaluate the audit risks to be considered in planning the group audit. That means you have to consider detection risk as well. No, it's saying you are not required to consider audit risk relating to foreign exchange transaction and balance, as this will be planned separately. 6 marks we will have. Okay. Okay. Now move down. The group operates cruises under 3 brands which offer passengers variety of cruise tenures. Okay. And these luxury ships have to adhere to the very high standards, so the group regularly incurs high expenditure on their maintenance as well as refurbishment. Several ships have been enhanced by the installation of new entertainment facilities, including cinemas and gyms. Equipment in the gyms will need to be replaced on every 3 years. Okay, cool. Now, we got it. Our first risk that group regularly incurs high expenditure on their maintenance as well as refurbishment. Several ships has been enhanced by installation of new entertainment facilities, including cinemas and gyms. Including in the gyms will need to be replaced on an average 3 years. So, what are the risks? The first risk is either they recognize capital expenditure as revenue expenditure or vice versa. Okay. Then the explorer ships, cruise ships will still luxuries are the oldest ships in the fleet, and the group is gradually replacing these ships with new ships during this year. 2 new ships with a total cost of 110 million will come into use. The ships took 3 years to build up and were constructed by Vela Shipbuilders Company, a company which is not owned by the group. However, the chairman of the group, Max Draco, is also the chairman of Vela Shipbuilders related party issues, and this son is the company's chief executive officer. Okay, the purchase of the ship was financed through 110 million loan with a fixed interest of 6% per annum. A further 3 ships are currently under construction by Vela shareholders. The group has taken out a loan of 180 million with a 6.5% rate to finance this crucial expenditure. Right. So, and obviously, they are the new client as well. Now we got some points. Let us write them and then. Now, firstly, to write the introduction, what you need to do, you do not need to write so many lines, right? What you will do, evaluation of audit risk, and firstly, you will go give introduction. In introduction, what you will say, these briefing notes include include audit risk and planning the group audit, comma, um, principal, audit procedures to be performed. Further, it includes matters to consider whether Pegasus and Co should accept to provide engagement advice, and finally respond to requests to use data analytics. That's it. That's how much you need to write for the introduction, not more than that. Now, let us start writing our first heading will be new audit line. Remember, this is our detection risk. So what we will say, the group is a new audit client is new audit client of firm was appointed 6 months ago. This gave rise to detection risk. As our firm does not have experience with the client, which makes more difficult to detect material misstatements. This risk can be mitigated through rigorous planning, audit planning. How's that? Then next heading, upgrade and maintenance cost. Post maintenance costs. So far, we got 2 marks. Now, let us look at the other point, the upgradation and maintenance cost. The group incurs high cost in relation to upgrade and maintenance cost of its fleets of ships. The group incur high cost in relation to upgrade and maintenance of its fleets of ships. For Sunseeker ships, $75 million is being spent this year. Spent this year, which is 4.2% of total assets and 92.6% of profit before tax. In bracket, I will use PBT to write the short form in future, and therefore it is material to financial statement. So far, so good. Now, further, what I will say that there is an audit risk that that costs are not appropriately distinguished between capital expenditure and revenue expenditure. Upgrade costs such as uh, new facilities as gyms should be capitalized. But maintenance cost should be expense. There is a risk that assets are overstated, expenses understated, if revenue expenditure inappropriately capitalized. One more risk which you can write is that that depreciation expenses which will be overstated if capital expenditure is overstated. So for this, how much you will get? 3 marks. Obviously, we did consider materiality, risk, and accounting treatment as well. Now let us move back up and look at the scenario further. Right. The Explorer crucible are the oldest in the group is gradually replacing this during the year and it will be in use. Ships to build and were constructed by Vila. Uh, okay, we already looked at that. So one more point, which can be extracted from the same paragraph which we looked at before we look at the Vila ships, is component depreciation. Component depreciation. Okay. IS 16 requires each part of property, plant, and equipment with a cost that is significant in relation to total cost. The item must be depreciated separately. There is a risk that ships in use are not broken. The ships in use are not broken into component parts for purpose of determining individual cost, useful life, and residual value of each part. For example, if significant, the gym equipment should be depreciated over 3 years and therefore require separate consideration from other assets such as engine, etc. There is a risk that depreciation is not correctly determined on component basis. Right. For this, we will get 2 marks. So 2 and 2 and 3, we already get 10 marks. Now, next, which we already looked at, the related to Explorer shares. You can see the para. Let me show you just a second here. Yeah. Mr. Darko is also the chairman of Vela Shipbuilders, and his son is the chief executive. The purchase ship was financed 210 million with the fixed interest rate of 6%. And further, three ships are currently under consideration by Vela Shipbuilders Co. The group has taken out of loan of 180 million. So we getting two issues out of these parts, which we just looked at. Number one is related party transactions. So it appears that now what we'll say, it appears that Vela Ship Builders Company, which is building new Explorer cruise ships for the group, is related party to the group, right? Now, why? Let us explain. This is because Max Draco is the chairman of both the group and Vela Ship Builders Company. Now, according to IS 24, a related party relationship exists where a person has control or joint control, significant influence, is a key member of the fact that Max Draco is the CEO of Vela Shipbuilders also indicates the related party relationship between group and the company. Got it? Now, IS 24 requires where there has been transactions between related parties there should be disclosure of the nature there should be disclosure of nature of related party as well as about transaction and outstanding balances. Okay, transaction of balances for understanding of the potential effect of foreign understanding of potential effect on financial state. There is a risk that the necessary disclosures regarding the group purchase of shares from from Vela for this part we gain 2 marks. Then this part we gain 2 marks. 4 for this part we gain 3 marks. 6 and 2 marks. So 2, 3, 2, 2, 3, 5, 6, 7, 8, 9 marks so far. Let us move on and get further marks. That is now we already looked at the next part, which is borrowing costs. So the ships being constructed fall under the definition for under definition of IS 23, that is borrowing cost, which define a qualifying asset as an asset that takes substantial period of time to complete. This includes property, plant, equipment during relevant construction period, property, plant, and equipment during relevant construction period.
Okay, period which for the ship is 3 years.
Which for ship is 3 years.
IS 23
Requires that borrowing costs which are directly attributable to acquisition, construction, or production of qualifying asset should be capitalized. The audit risk is that is that interest cost as not appropriately capitalized. The amounts involved however loan $180 million uh, for ships which are under construction. Interest for year is 11.7 million, which is 14.4% of PBT and therefore material to profit. Material to profit. So we got how much again? For this part, we get 3 marks. So 9 and 3, we got total 12 marks so far, right? I hope it's clear till here.